Okay, well, I think we can start now. I wanted some other persons to join us, but they'll meet us. We have tried. We give some 7 minutes for them to join us. So, once again, you're welcome. You're welcome to the Indices Market Mastery. Okay, Sonny, okay, no problem. You'll be attended to. I got your message. You'll be attended to. You'll be attended to. Okay, so for the rest of us, you're very welcome. We will be having a good time today. We have the CPI, which we had PPI yesterday. Didn't move so much, didn't move at all. But and we have CPI today, which I expect to have more volatility. It's already a fact that CPI usually has more volatility than PPI, because CPI is all about consumers, right? Consumers price index, as against PPI, which is producers price index. So let's head over to Forex Factory. Let's check it out, see what it's like, and if it is something that we can take advantage of today. Let me share that screen with you. Okay, good. Here we have it. This is Forex Factory. I hope you're with me. Today we have about 4 high impact data coming out. About 4 of them coming out. And as I always advise us, as I always talk about, when it is all about when you have more than 1 high impact data coming out on a pair, you need a bit more of analysis to be able to get through it. You understand? When you have more than one high impact data coming out. So for today, you will notice that on CPI by 1:30 p.m. today, we have core CPI monthly. M means monthly. That's month by month. CPI month by month, CPI year by year, and unemployment claims. Okay, so we have basically 3 different CPI data coming out, and we have unemployment claims. Of these 3 CPI data that will be coming out in the next 20 minutes or thereabout, 3 of the 3 of them, core CPI actually is the one that is most likely looked out for. Just now, core CPI is one that's most likely looked out for. But unemployment claims will also be coming out at that same time. So this is the point. The point is this. There's likely going to be a conflict, except if every of these data come out in a certain way. So if CPI data comes out higher than expected, unemployment claims reduces, which is also a good thing. That's going to give the dollar a lot of strength. Let me explain that, or let me take that again. We have tried to explain what CPI is all about. CPI stands for Consumer Price Index, right? Consumer price index. When we talk about Consumer Price Index, we're going to be taking a basket of consumer goods. We'll take a basket of consumer goods, and what we'll do with them is that we are going to they're comparing the price. Comparing the price of these goods. If it's in Nigeria now, we'll take rice, we'll take the bag of rice, take a bag of beans, we'll take gari, we'll take oil, and then we'll compare the price. What was the price last month? What is the price now? You understand? In this case, they are looking at the CPI for last month. So they will compare the price of the upper month with last month, and they'll now find out if there was an increase. If there was an increase, it will be calculated, it will be turned into percentage, and it will be recorded here. You understand? So the idea is that if there is increase in CPI, that will likely force the government, force the Fed to increase interest rates, and people love or investing in the dollar, especially in an increased rate, is actually good. Investors love that. So that is why if CPI data comes out higher than expected, it will be good for the dollar. it will be good for the dollar. But the thing is that if around that time also, because around that time, unemployment claims will be coming out. So if the data that comes here is good for the dollar, if it is higher, dollar is supposed to be strong. But the clause is that if by that same 130, when unemployment claim comes out, if unemployment claim comes out and it is lower than expected, this is unemployment claims. So unemployment claims comes out weekly, and the way it does is they are calculating number of people who file for unemployment benefits. Okay, with that they can likely tell the number of unemployed people. So if this data, we are expecting it to be around 211,000. If it comes out and it is lower than 211,000, that means that unemployment is lower. You understand? If it is lower than 200,000, 211,000, that means unemployment is lower. And if unemployment is lower, that is good for the currency. So what will make the dollar strong is if these data come out positive and this one comes out lower than 211,000, will make the dollar strong. But once we begin to have mixed data, once we begin to have mixed data around here, CPI comes out good, the other one comes out bad, once we begin to have mixed data, that is like there's a high chance that will weaken the dollar. Okay, there's a high chance that will weaken the dollar. Of course, it's not advisable to begin to trade before the news comes out, but this is what we're expecting. Okay, so once the data comes out, if everything is good for the dollar, we buy the dollar. If everything is poor for the dollar, we sell the dollar. But once we begin to get a mix, there's likely going to be some level of confusion in the market. The best bet will likely be to sell the dollar or to instead wait for the 230 session. I have stated that. I know that only about 40 or 50 of us have had this, and a larger number will join us later. And you begin to see some very funny comments like, what should I do? What should I do? But I just want to repeat it again. If the data comes out by 130, if it comes out all good for the dollar, or why we'll buy. If they come out all bad for the dollar, why we'll sell. But the truth is that once they begin to come out mixed, this one good, this one bad, the best thing you want to do is it's better to sell the dollar or to just hold on for the 230 session. Okay, because that conflicting data is likely going to be chaos in the market. Okay, good. Another thing is this. CPI data for a couple of months now, when it comes out, it has always been known to return back. That means if CPI gives dollar strength, after a while, you see dollar begin to fall back. Okay, if CPI makes dollar weak, after a while, you see dollar begin to buy back. So that is also an opportunity for us in the sense that if we do not take advantage of the move that comes out, that starts when the 130 data comes out, we can begin to take advantage of the retracement, the opposite of the move. So if the data comes out, for instance, and dollar buys, after a while, you will see dollar will begin to fall, and you can take advantage of that fall. So the good thing about CPI is that it's possible for us to have a win-win. You can take advantage of the first move and the second move. You can take advantage of the first move or the second move. You understand? So that is how it is. But this is what it's going to look like. From what you're expecting, we're expecting the same for 0. Core CPI. Let's look at how PPI came out yesterday. Let's look at how PPI came out because it will likely follow the same pattern. Look at PPI. Yes, PPI. Yes, here. We were expecting PPI to be the same, right? But when it came out higher than expected. It came out higher than expected. We were expecting this to also reduce, but when it came out higher than expected. You understand? So that's the whole idea. The idea is to it's very possible that this data also will follow the same pattern. Very, very possible that when CPI comes out here, it will be higher than expected. And this one also will be higher than expected. Naturally, I expect the CPI data to give dollar strength. If you ask me what I expect CPI to do, I expect that when immediately the CPI data comes out, Euro USD is going to fall I expect GBP USD to fall. I expect gold to fall. I expect US 100 to fall. You know, the issue now is how long that fall will continue. You understand? I expect these things to fall. But the truth is that even when they fall, there's a very high chance that they will buy back. Okay, so the first movement that CPI will do, traders will first react to the data and, you know, move with the data. But as time goes on, you will see the move will begin to return back. So what I expect personally, which of course, you know, based on speculation, what I expect is when CPI data comes out, it's going to give the dollar strength. First of all, it's going to weaken US 100. It's going to weaken gold. It's going to weaken US 2000. It's going to weaken US 30. It's going to weaken Euro USD. It's going to weaken GBP USD. But when it comes out like that, I do not expect that strength on the dollar to continue for too long, or whatever it does, I expect that it will still retrace back down. And let me show us on the chart. Let me show us why I think so on the chart. Just a minute. Okay, so let me share my chart with us. Share. And here we go. Good. Now, let's give ourselves a bit more space. Good. We have a wider chart now. Let's also use a clearer chart, you know, clearer chart. Later, after this move, we're going to talk about Bollinger Band. That's why I have it on my chart already. But I'm saying that this is the dollar index. The dollar index is generally like this on a downtrend, and we likely expect that, you know, that downtrend is likely going to continue. But what I'm saying now is that this news that will come out is likely, first of all, because you can see that even technically, the dollar is resting on a support, which we know as a verified support. Look at this place. It's a verified support. It's resting on this support. Okay, so the idea is from this place, that data might give the dollar a bit of strength. Maybe, you know, maybe dollar will just buy from where it is. This is the dollar index at least. Maybe the dollar will buy from here once that data comes out to what? To maybe around here. Okay, I don't know. I cannot really tell how long the bullish move will be, but I expect the CPI data to give the dollar strength, but I don't expect that strength to continue for long. After a while, price is still going to return back to its trend. You understand? So that is how it works. That is how it works. And if that gives dollar strength, if the CPI gives dollar strength, you understand, Mr. Onyeka, or this person asking this question, I expect that you already knows this. You already know this because I know this name. You attend this class every time. Of course, if dollar is strong, you expect that gold is going to sell, right? Of course, if dollar is strong, you expect that indices will sell. Of course, if dollar is strong, you expect Euro USD to sell. So that's what we're saying. If that data comes out and it strengthens the dollar, we can take advantage of that by buying the dollar and selling its counterparts. You know, US 100 will likely be expected to fall. Okay, let me make sure that my chart is all good. US 100 is likely going to, you know, first fall. You can see that even US 100 is kind of ranging around this verified resistance. It's ranging around here. So that data is likely going to push US 100 down. You know, GBP USD also still ranging around that resistance of yesterday. So that data is likely going to push it down. You know, gold. Let's see gold. Gold also ranging around its own resistance. The data is likely going to push it further, push it down, you know. So I expect that the data will give strength to the dollar. But I have said that for CPI, after a while, you know, I don't know how long, but after a while, that is likely going to return back, you know. So as US 100 will first push down, you know, maybe fall as low as this 50-period moving average, I expect that US 100 will likely sell from this verified resistance all the way to maybe, if at all, the move is a very good move, it sells all the way to maybe this 50-period moving average and all that. After a while, say by 2 o'clock or by 2:30 when the market starts, it's very possible that by 2:30 when the US session returns, these markets will begin to return back to their trend. and you see US 100 begin to push back up. You see dollar index begin to fall back down. GBP USD begin to push back up. Gold begin to push back up. You know, Euro USD begin to push back up. You understand? But for the sake of this, Israeli Hamas conflict, yes, but the truth is the Israeli Hamas conflict is not really creating so much impact on the market yet. Where we have a whole lot of its impact on, that we expect is on oil, but not so much on this. Well, it has had impact on gold because gold has been buying. You see that people are during time of uncertainty, people buy gold. You understand? But we are talking of the reaction of the market to CPI. You understand? Fundamental is something fast. Sometimes fundamental is something volatile. Fundamental is something where you can make as much profit as possible, but it's not so much as where will it buy to? Because that's a question that people ask that I actually find funny. When a fundamental is coming and people are asking, where will it buy to? Where should I take profit? If you're trading fundamentals, if you're using pending orders to trade fundamental, you're entering the market to trade fundamentals, you do not really want to relax on a particular place to close or a particular place to take profit and all that. That's why some people use trailing stop. You understand? You can have your pending order on US 100 and put your trailing stop. You can put your pending order on Euro USD and put your trailing stop, and all that. But that I think I've been able to achieve what I set out to explain to you what CPI is all about and how we can take advantage of any move. Now, remember, we're going to go back to Forex Factory, but remember that once the data comes out, if it comes out all good for the dollar, that means we are heading, we are expecting a push up in the dollar. That means US 100 will respect this verified resistance and fall down. Okay, and you will see that most of those dollar pairs, they are also at resistance point. Okay, so it is showing very much that is expected to actually fall. First of all, the first reaction that it is likely going to have is what? A fall. That's US 100. The first reaction that something like GBP US is likely going to have is a fall. First reaction that something like gold is likely going to have is a fall. The first reaction that something like US 500 is going to have is a fall. US 30, the first reaction is likely going to look at it around this proven resistance. It's likely going to have a fall also. But the truth is that what I see is after this CPI, okay, once the 230 session comes back, it's possible that whatever fall that US or that these instruments make, they're likely going to make the reverse move. Because if you go back like I did before the class, you go back and check the last time CPI came out, maybe last 2 or last 3 times, you will see how price was able to return the move of the market. You understand? You see how price was able to return the move. Okay. Yeah, so that's how it works. That is how it works. So yeah, we have 5 minutes more. Is there any other question? Is there any other question regarding CPI? It's strange that we have a smaller number of persons today. I guess most of them will join after will join once it's 2 o'clock. I think also yesterday's trades that we took yesterday, yesterday afternoon, I think most of them actually turned out well. I think most of them turned out well. Maybe Euro JPY, even GBP USD actually did some 30 pips from that point, but I don't know. I've not gotten any, just a few persons that messaged me on WhatsApp and said they made money. And then some people messaged me and said they were not able to trade. Some made loss and we were able to check it. But most persons made profit. So, any question? Most people actually did not take trades from yesterday. Because most of the feedbacks I got from people who actually made profits. I made profit on GBP USD, made profit. US 100 actually sold. I made small profits. Don't worry, God will help us. We'll make more today. Sometimes to this profiting is also a result of confidence or mind. You understand? As time goes on, as you get more confident, you're able to stay longer. If CPI data comes out high, that's what will make dollar index positive. If it comes out high, then there's even a higher chance of interest rate hike, and that is why people want to buy the dollar now. Like if CPI data comes out higher than expected, if it comes out higher than expected, that means that there is increase in inflation, and the response usually to high inflation is to increase interest rates. So that's what investors understand, and that's why first of all they will even go and they'll go and buy the dollar once the data comes out. Okay. I want to sell US 100 on 1 minute scalping. Okay, sir. Okay, Romeo. Yeah, you can do that. I'm actually not giving out pending orders, but if you're taking pending orders, you can actually do that. I advise that if you're using pending orders, you use trailing stop also. You understand? Use trailing stop also. Yeah, that's important. Or if you're using pending orders, you should be there to monitor the trades, and that's important. So if someone were to use pending order on this US 100 now, you want to be above this range here like this. You want to set your buy stop maybe above here, set your sell stop maybe below here like this. So yeah, if you want to use pending orders, fine. Let me head to Forex Factory. Okay. Nice. 30 seconds. So remember, if the data comes out mixed, one is positive, one is negative, and all that, it's likely going to weaken the dollar. And for that kind of information, you likely just want to follow the market move instead. So I'm hoping that data comes out all good for the dollar or all bad, so that we have a clear direction. Get. Okay. Okay. Still pending. Oh, came out the same. CPI came out the same. This is likely going to weaken. Oh, this one came out lower. Came out lower. Came out higher. See, this data is mixed. One is coming out higher. Well, let's see what it is. Let's go to our chart and see what's happening. Oh, okay. US 100 is selling. US 100 is selling. Dollar index is buying, but like I said, I do not expect, you see this strength that the dollar is having now, I don't expect it to stay for too long, please. I do not expect it to stay for too long. This buy that the dollar is doing, I do not expect it to stay for too long. So if I were to advise you right now, I would say we should not, yeah. I don't expect this move to stay for too long. Okay. So guys, please, with this data that came out, we have mixed data. Okay, we have mixed data. So what will happen? What I would expect to happen is that this push up that dollar index is doing right now, there's likely going, this fall that US 100 is doing right now, there's likely going to be you've pulled out already. Wow, you fast too. That's fundamentals. It's not, Mr. Romeo told us, he said you want to scalp sell, and he has pulled out. Very good. But I don't expect these moves to continue for a long time, because let's look at the data again. At least now we can look at the data. Don't worry, we are still going to trade. We are here till 2:30 when US session will open. So CPI, which is the major one we're looking out for, came out the same. It came out the same. And so I feel like this would still weaken the dollar. What is giving dollar strength? That maybe these unemployment claims that came out better. It came out 209,000, about 2,000 lower. Okay, 2,000 lower. But I feel like no massive move actually. The data itself is mixed. The data is mixed. Like I said, if all the data actually pointed towards a direction, all well and good. I hope you are understanding how to trade fundamental. You understand? Understanding how to trade fundamental with knowledge. Good. So US, the dollar index has gotten to that point where we said it's likely going to get to and retrace from there. Look at it here. So it's either if it breaks above here, then we can keep buying, which I don't expect. You understand? So guys, my humble submission on this fundamental that has happened now is that there's going to be a retracement. There's going to be a retracement. There's going to be a pushback during the US session, and we are going to be here to take advantage of it. You understand? Somebody that wants to buy, for instance, like US 100 that is an uptrend, someone that wants to buy will be happy to actually take advantage of a buy once this fall is done. You can take advantage of this buy and make very good profit from it. You understand? Even gold too. We don't have any massive move. We just have it playing around this zone. So it means that market is not swallowing this data as much as we expect. The data is mixed. The data is not exactly what people are looking out for. People were looking out for massive level of inflation so that they can buy the dollar. But we don't have that. I think euro actually moved a bit more. So what we will do is we will take advantage of the 230, the retracement, once 230 happens. Okay, from here we have a double top here on US 100. So I say double top, that's dollar index. We have a double top on dollar index. So guys, let us continue with the session. Let's look at what we need to look at. By 2:30, we'll take advantage of the move. We'll have a major move by 2:30 when the US session opens. Okay, so let's go together. Yes, so within the next 20 minutes, because by 2 o'clock we start giving trades for the 2:30 session. So within the next 20 minutes, I want to talk to us about Bollinger Bands. I want to talk to us about Bollinger Bands, which I know that a whole lot of us here actually know about. I'm sure we all know about Bollinger Bands. We know what Bollinger Bands is all about. Now, for Bollinger Bands, what we do, Bollinger Band is also in the class of the moving average. Bollinger Band is the class of the moving average in the sense that it is a trend indicator. It is called a trend indicator. It's an indicator that helps you to tell the trend. Okay, it's a trend indicator. It helps you to tell the trend. That's how Bollinger Band works. Okay, now let me apply it on the chart first of all. How do we apply Bollinger Band on the chart? Now, like I said, Bollinger Band is an indicator just like the moving average. Okay, how do we apply it? We're going to look at how we apply. We're going to look at how it is calculated. We're going to look at how it is used and what is the best way that it can be used. Okay, so let's jump in. To apply the indicator to my chart, I'll go to indicators list. I select indicators list. I go to Bollinger Bands. I go to Bollinger Bands, select Bollinger Bands, and I select, just leave it like this. You have 20, you have 2, you have apply to close. That's the default setting. Okay, so just leave it like that. Okay, leave it like that. Now, what we have here is Bollinger Band. Let me try and see if I can make it thicker. Good. So have a thicker band, Bollinger Band. No problem. We'll do something on Fibonacci. Maybe that's the next thing we'll talk about. So this is Bollinger Band. I know it may look a bit chaotic, so I'm going to take out my moving average. Good. So you see the green lines that you see. The green lines that you see, those are Bollinger Bands. And I did not have to apply, hey, in terms of language use. Okay, okay. Well noted. I don't, okay. So in terms of I applied one band, the Bollinger Band usually comes in three lines actually. Okay. Now, how is this Bollinger Band calculated? How do we calculate this? Okay, we calculate the Bollinger Band is calculated first of all by using moving average is part of this. This middle line here, this middle line you can see here, this middle line is a moving average. It's actually a simple moving average. That's what the middle line is for. It's a simple moving average. Now, simple moving average in the sense that, when we talk about moving average is an indicator on its own. And moving average is used to calculate the average move. It's moving average, so it's used to calculate the average move of price or the average change of price, right? Now, under moving average, we have about 4 different types of moving average, but majorly or popularly, we have the simple moving average and we have the exponential moving average. We have the simple moving average and we have the exponential moving average. The EMA strategy I taught us, now we talked about yesterday and for some time now, we're talking about that strategy. That moving average is exponential, EMA, that's exponential. Okay, but this one in the middle, you see this moving average in the middle, it is a simple moving average. Simple moving average. That's what this one is. Now, what about these two lines here? These two lines here. These two lines here are calculated using what we call standard deviation. Don't worry about that one, okay? Don't worry. If it's only student of statistics understand that. But what I'm trying to explain is that it's called bands. This one is called the upper band. This one is called the lower band. Why? Because they have calculated a particular level of deviation from this moving average. So the strategy says that the strategy is born from the fact that price usually comes back towards the moving average. Okay, it is noticed that price always tries to converge back to the moving average. And that is why that band has been made, the upper band and the lower band has been made to show how much price has deviated from the moving average. So your upper band is trying to show you the level of deviation from the middle band. Your lower band is trying to show you the level of deviation from the middle band. So it's important that you understand why it was created like that, so you know how it works. So most times, the upper band and the lower band is always trying to show you if price is coming back or when price is coming back towards the middle band, because we expect that price is likely always going to flow within the band. For instance, as you're looking at it on dollar index, you can see that my candle is currently above that band. The candle is trading bullish and is trading above that band, but it's expected that no matter what happens, no matter how high price goes, price is likely going to come back into the band. So first of all, in terms of ground knowledge, people normally use Bollinger Band in this simple way. Once price begins to trade above or outside the band, they begin to trade the retracement. Okay? So once price, for instance, as this dollar index is like this and trading outside this band, okay, this first and very simple way people use this instrument is that they begin to look out for a sell because they expect that price is still going to fall back into this band. You understand? So that's the first way that the Bollinger Band is used. Okay, of course, it's not the best way. It's not the best way, and we are going to look at that as time goes on. The Bollinger Band, it's what I've explained to you, that the Bollinger Band is made up of the middle, the upper band, and the lower band. That middle band, that middle line is a moving average, simple moving average line. In this example here, it's a 20-period simple moving average. But the upper band and the lower band is trying to show the level of deviation that price is taking from the average. And it's built on the fact that price always tries to come back towards the moving average. Price always tries to come back towards the moving average. That's what is usually built on. Now, remember I said the first way people trade use the Bollinger Band is that once price begins to trade outside the band, people begin to trade the retracement, expecting it to come back into the band. So, like I said, as dollar index is trading up, like you see people will begin to take sales, expecting that as time goes on, this price is going to come back into the band. And from there, they take their profit. That is the first way Bollinger Band is used, but it is not the best. It is not the best. Why is it not the best? It's not as if there's a particular strategy that is 100%, but the truth is that trend indicators like moving average and Bollinger Band, trend indicators, they are usually they make sense when you combine them with something else. The moving average, just like Bollinger Band, will be more effective when you combine it with price action. Bollinger Band is more effective when you combine it with price action. At least at the barest minimum, Bollinger Band is very effective when you combine it with support and resistance. So we are going to look at different ways that about 2 or 3 ways that the Bollinger Band is actually used. Okay, that is apart from that general way of buying once it's above the band. That I will not advise that you actually use. You understand? Of course, there are people who have found their way around these things. So I always advise people. I say, anytime we say this strategy, set it up on your demo. Look at it. You'll be surprised that you will now find out that there's a way you can tweak it. There's a way you can tweak it to do this, to do that, you know, and all that. So, but this is the first one we're talking about. The first one is to combine Bollinger Bands with support and resistance. Combining Bollinger Bands with support and resistance. How do we do that? Very simple. Just the way you have it on your chart here. Whenever price is above or price is out of its band, okay, 2 ways. Whenever price is out of his band, like as price is out of his higher band, out of the upper band like this, okay, we are going to be looking at taking a sell, not immediately, but at the closest resistance point. Okay, if price closes outside its band, okay, and of course closes, if the candle closes outside its band, you should be looking at taking the rejection or taking the retracement at not at the current price, but at the closest resistance or support point. What do I mean? This US index that we're seeing is likely going to return back into this band. You know, it's likely going to show. But what I'm saying is that if, for instance, price buys as this is above this band, if price buys towards this resistance around this, I'm not just going to be entering at any point. I'm going to be entering at this resistance point because I see that it was rejected the last time it got there. So I'm not just selling because it's outside my band. I am selling at a resistance point. Once price trades below the lower band, if price trades below the lower band, I will be looking out for entering a sell around the nearest support. Not just, you know, just the same way we dealt with RSI when we talked about it yesterday. You know, just like RSI, Bollinger Band can also be used to determine overbought, oversold region. Do you understand? Because the upper band, especially when you are trading indices with it, the upper band is used to tell an overbought region. The lower band is used to tell an oversold region. That is true. You understand? But yes, just like the RSI, just because price is overbought does not mean it may not keep buying. Just because price is overbought does not mean it may not keep buying. So instead, what I will do is that if price is outside this band and I want to trade the retracement, I'm going to be entering my trade around the closest support or the closest resistance. That is just a very simple and more effective way of using the Bollinger Band, combining it with support and resistance. Combining it with support and resistance. Okay, so when it hits my higher band, it's trading above my higher band, I look out for entering my sell on the closest resistance level. Just like anybody, just like I was saying, anybody who had entered the sell and was saying, oh, I'm expecting the price to go back towards the band, would likely be in profit depending on where you entered. But it's better that you take that your sell, even as it is above the band, you take your sell at a resistance point. You take your sell around the resistance point. In this case, those two resistance points will likely be around here, 105.747, or around up here, which is 105.958. You understand? Now, what also another thing is that you're also going to be looking out for a retracement if your Bollinger Band, if your upper band or your lower band is around the same place as your support or resistance. What do I mean by that? If you follow me to this lower part here, down here, around this point here, we have a verified support. We have a verified support here. It also happens to be the same place where my lower band is situated. You can see that my lower band is situated around this verified support. So if price comes towards here, this will be a good place for me to buy. This will be a good place for me to what? For me to buy. So at the point where your Bollinger Band, either your upper band or your lower band, coincides or joins or merges with your support or resistance, that is a good place to trade retracement. That is a good place to trade retracement. That's a good place to enter the opposite direction. Price sold and sold and sold to this support, but at this support, the lower band also merged with the verified support. It's a good place for me to take a buy from. Okay, so because we're looking at indices, let's look at US 100 for instance. Let's apply the Bollinger Band to US 100. First of all, let me check. Okay, let's apply the Bollinger Band to US 100. Sorry. So Bollinger Band on that trend, right? Go to trend. On that trend, you see moving average, you see Bollinger Band. Select Bollinger Band and select OK. Good, so we have it here. Now, I'm going to take out this moving average line just because of what I'm explaining. Good. So this is the Bollinger Band, right? This is the Bollinger Band. Remember, I have said there are two ways to trade this Bollinger Band. Once it is above the band, look at this, look at an example here. Once price, for in this case, price was below the band, right? Price was trading below the band. And we expect that when you're using Bollinger Band, price must always go back into the band. But what is important is where are you entering? Now, price is selling. It's already below the band, right? So I'm expecting to go back into the band. I'm going to be looking out for a sell around the nearest support, which in this case was here, to take that buy back into the band. There are people, especially, you know, I consult for a few set of clients, you know, I will not say, well, I consult for a few set of clients who have very good volume in the market. I'm talking of heavy volume. And there are a few of them that I've noticed that, you know, when we talk and after we had classes like this, they decided to use the Bollinger Band. Let me tell you what they do. Now, once price begins to trade outside the band, okay, once price begins to trade outside the band, they begin to take trades to go back into the band. As much as price continues to go away from the band, they still take positions. Now, what those people are doing is what they call stacking, along with what they call martingale strategy. Now, because they are expecting price to go back, they'll continue to take that. For instance, as price is going lower, it's going down, it's going below the lower band, they begin to take buys, they take buys. As price begins to go back towards the band, you see that these people, of course, they have very good volume. So it's not as if they are taking an unnecessary risk. Because normally when we tell people that we have people who take a lot of trade, they say, it's too risky. No, it's risky depending on what you are trading with. So I'm talking about people who have very good volume. And so they begin to take a buy back towards the Bollinger Band. Now, it's very possible that price does not even get to that band, but because they have taken subsequent buys, by the time price is returning, they've made a whole lot of money, what they call stacking. You understand? Chika, the update is what I am actually teaching on now. That's the update. That's what you should listen to. Okay. So price is headed back towards the band. You understand? Price is headed towards the band. And that is why at the end of the day, the Bollinger Band is such a nice tool for trading retracement. But I have said something. It's important that you choose where you are entering the market. If price is outside the band, price is likely going to come back to the band. But the truth is that where you want to enter once price is outside the band is the nearest support or resistance point. The nearest support or resistance point. Okay. Now, apart from that, and that thing I said was that you should be looking at taking your trade where your band coincides with your support and resistance, where either your upper band or your lower band coincides with your support and resistance. You can see that your band is showing that US 100 is still on an uptrend. That is why I said even with the sell that US 100 had done, I still expect that it will push up. The problem is this verified resistance that it is close to. You understand? For right now, if you're trading US 100, the best thing to do is to take buys at support. Remember last week, 2 weeks ago, I was telling you to take sells at resistance, right? The best thing to do for US 100 now is to take buy at support zones. Right, good. Now, look at this example. Look at example of this place. Around this place here, if you check, my lower band was merging with my support, and that is a good place to take a buy from. Look at this place here. My lower band merged with my support. The lower band was on the same line with my support. That's a good place to take a buy. So when your lower band or your upper band is on the same line with your support and resistance and price around there, that is a good place to trade a retracement. That is a comfortable place to trade a retracement. Okay. Now, the third aspect for trading using Bollinger Band, is when you ascertain the trend of the market on the higher time frame. If you can ascertain the trend of the market on the higher time frame, for instance, this US 100 that we are looking at, it has begun an uptrend. After the fall, it has begun an uptrend that is headed upwards, right? It's headed upwards. Now, that means on an uptrend. What am I supposed to do? It means that if I put my Bollinger Band on my chart, because price is on an uptrend, I should be looking out for taking buys anytime price sells towards the lower band. Okay, I did a little pause so that was sinking. I don't know if you walked. But what I'm saying is that since price is on an uptrend, for instance, looking at US 100, since it is on an uptrend, I should be taking buys from the lower band. Anytime price sells to the lower band, I should take a buy from there. Anytime price sells to the lower band, I should take a buy from there. If a particular instrument is on a downtrend, you should be looking at taking your sell from the upper band. You should be looking at taking your sells from the upper band. It's as simple as that. So you can use the Bollinger Band with support and resistance, okay, to know where to enter the market. If your price is overbought, that's above your upper band, you want to enter the nearest enter your sell at the nearest resistance. Another thing I said is that if you should enter trade your Bollinger Band where your upper or your lower band merges with support or resistance points. And the third one is that you should get the trend of the market on the daily time frame and follow that trend on 1 hour. If the daily time frame shows you that the market is on a downtrend, the market is on a downtrend on 1 hour, anytime price goes towards your higher band, your upper band, that's where you should take a sell from. Anytime price goes towards your upper band, you should take a sell from there. If your price is on an uptrend, anytime price goes towards your lower band, you should take a buy from there. Okay. So let me get questions regarding this. Especially, I'm very interested in Regina. Regina, I want to hear if you understand it, because you asked for it to be simpler. So please let me know if you understand, if I was able to use simple English. How do I add Bollinger Band to your template? Oh, very good. Now, this person is asking not just to add it to my chart. How do I make it a template? So let's do it. I am going to first have a naked chart, right? A naked chart. Remember that if you're adding to templates, you're talking about someone who's using a laptop, who's using a system, not a phone, right? Good. Now, what I'm going to do is that I'll come to, first of all, I want to add maybe my support and resistance because it's important. I want to add support and resistance. I'll go to indicators list. Then I'll go to custom, because most of the indicators that are added that do not come with the MT4, added from external source, they are recorded under custom. So I go to custom. As you can see on the chart, I look first for support and resistance. Okay, I look for support and resistance. I select OK to allow it on my chart. I have it on my chart, right? Now, I'm also going to add the Bollinger Band. So I go to my indicators list again. I go to trend and I select Bollinger Band. When I select it, just select OK. So I have my Bollinger Band on my chart now. How do I now save this as a template, which is what Precious is asking? I come to template, select template. Once I select template, I will just go to save template. Look at it. Save template. Select save template. And I can give it whatever name I want. Okay. So I'll call this Precious Bollinger because it was asked by Precious Bollinger, and then I select save. So what happens is that if I go to any chart again, for instance, on GBP/USD, and I want to apply that thing, I'll just come here, come to indicators list. I'll look out for it, Precious Bollinger. Look at it because I've saved it. So once I select Precious Bollinger, it gives me that template. Okay, so if you want to save any template after you've made the changes you want to make on the chart, go to template here and select save template. Put the name you want, and it will be saved. Then Magic Energy Precious asks, how do I add it on my phone? It's just the same way I showed us adding it on adding the moving average on your chart. On your phone, at the top of your chart, you see an F sign. Yes, it's not exactly F. It stands for formula. You know, it stands for formula, but it's like an F, you know, stylish F. So select that. Once you select that, you should see at least two options. You should see main chart. You see main chart, and you see maybe indicator window or something like that. That main chart, the F plus, there's an F plus in front of it. There's an F plus. Select that F plus. When you select that F plus, it will give you a list of indicators, which one of the first options you should see should be Bollinger Band. So select that and select OK, done, to be added to your chart. Mark says I should kindly explain what I said earlier. I don't understand what you mean. Explain what? What exactly? I said a lot earlier. Please, oh, pity me. But the good thing is this, Mr. Mark, the good thing is that this class is actually live streamed. You understand? So I'm going to drop the link again. You can go on YouTube and actually watch it. Okay? You can go on YouTube and watch it. Okay? Does it work on phone? Of course it works. I just explained you can put it on your phone. It works. The issue is that you might likely have is that you need to be able to sort out support and resistance points for yourself on the phone. And I've explained that it's easy to get support and resistance on your phone. Just use a higher time frame and mark where and just look at where price is. Mark that place. If you find out that around 3-4 candles cannot trade above or below that place, that is also your thing. Regarding how to set it up, I just explained how to set it. So I want to believe you actually heard me when I was explaining it. If you did not, there's no problem. This class is recorded. Once I share the YouTube link with you, you'll get it. You'll still listen to it. So for instance, look at GBP USD, guys. Before I reply to the next question, look at GBP USD. Should we not buy GBP USD from here? GBP USD we should be looking out for a buy on GBP USD here, because it's outside the band and it's on a verified support. So we should be looking out for a buy on GBP USD here. Okay. How can I get the support and resistance template like what you use? The support and resistance template. You have a system. If you don't have the support and resistance, if you came to any of our offices, you should have it. But if you do not have it, just reach out to your account officers. They'll be able to get it. Then for Mr. Emmanuel, I expect that a link like this should be saved somewhere. You know, it's what I always tell people. When people say, tell my account officer to be sending it to me every time, it's fine. But you personally, for me now, I have this link saved. It's not, the links are not many. This particular link is for morning, the same link for morning and afternoon and whatever, this same link. So I don't think you have too many links that you can actually miss out on. Just put it on WhatsApp and put it on WhatsApp and you can start it, you can start the message. You understand? So regarding Bollinger and take profit and stop loss, it's when you talk of targeting pips, for instance, on this GBP USD now, if we're looking out, like I said, that it's on a verified support and it's outside the band, if I'm looking out for a buy right now on GBP USD, it's not about pips now, it's the fact that I expect price to trade into this band. You understand? So in this case, yeah, I have at least 10 pips I'm expecting, at least 15 pips I'm expecting, but it may differ. It may range from one point to the other. You understand? So there's no fixed amount of pips that you're targeting. Another thing is that it also depends on how confident you are. You understand? Hey, it depends on how confident you are. But that is why it's better to enter at these strong zones, support zones, resistance zones, But whenever I trade, I always target at least, 20 pips. So yes, for something like this, especially when you wait for the Bollinger Band and you enter the support or a resistance point, you should target at least 20 pips or thereabout. There's no support on the phone. There's no support on the phone. The middle band, there's no support and resistance for phone, but what you can do is you can easily tell support and resistance on your phone when you see candles that cannot trade. Let's say candle is buying, it gets somewhere, instead of it to continue buying, it goes back down. You can mark that place. That place is a resistance. And the same thing for a support. Okay. Does it mean the middle band serves as the resistance in case of the GBP USD? The middle band, yeah, the middle band can serve as the resistance, can serve as the support. You understand? It can serve as resistance, can serve as support. But at the end of the day, all these bands here actually can play the role of support or resistance. You understand? They can play the role of support or resistance. But like I've explained, for GBP USD, I'll look out for a buy on GBP USD. I hope there are people who took that. So now before 2:30, let's go into our indices. Let's begin to look at them one by one. I've already done GBP USD. Already done GBP USD. Good. So US 100. US 100 is on an uptrend, but it has hit a proven resistance. Hit a proven resistance. So we actually would expect that it falls a bit down. But for people trading US 100, my advice to trade US 100 will actually be to look out for a buy move in the market. Why do I say that? Because it's on an uptrend. Is there a difference between Bollinger and EMA? Yes, there is. There are two different indicators. Okay. There are two different indicators. So I'm explaining or I'm analyzing US 100. And what we should be looking out for the 2:30 session or for the US session, I personally will be looking out for the fact of or looking out for a buy Yes, right now it's selling. I still expect a further fall in the market. But the truth is that since it's on an uptrend, I feel like this is a retracement from which I can take advantage of a buy in the market. You understand? It's a retracement from which I can take advantage of a buy in the market. So that for those people who will trade US 100, this is what I'm going to advise. You see this lower band here. You see this lower band here, where this lower band here is, which is around 15,325. 15,325. Let's see where that place is on the smaller time frame. Okay, 15,325. Around here, I feel like if at all price sells to this place, this is a good place for us to take advantage of a buy from. So what I'm going to do for my 2:30 session is, first of all, I have a pending order from here, from around my sell stop from around 15,355. My sell stop from around 15,355. You know, if I'm placing a sell stop, it will be around 15,355.27, and then I'll be taking profit around 15,325. So I'll be entering my sell stop at around 15,355, and I'll be coming out at around 15,325. Okay, that is in case of, that is regarding a pending order, since a lot of people like to hear buy stop and sell stop. Personally, I'm not of that opinion, but a lot of people like buy stop and sell stop. You can do that. But for those people who will be looking at taking maximum advantage of this market, what we are going to do is that no matter how much US 100 sells, we are going to be looking out for a buyback, a pushback in the market. So you can apply your Bollinger Band on your chart. Once price trades towards this lower band, if price trades towards this lower band here, which is around that place I gave as a take profit for the sell, once price goes to 15,320, from that 15,320, we can begin to look out for a push back up to the market. And I expect that that move is likely going to be longer than the sell. The buy is likely going to be longer than the sell. Look at it on daily time frame. You have bullish move, and we expect that bullish move to continue. You understand? We expect that bullish move to continue. So now that it's selling, is a good thing. It means that we can take advantage of that buy. You can take advantage of the buy. Okay. So I expect that buy. I expect to look out for a buy on US 100 once it sells to around 15,320. If it sells to 15,320, I can take advantage of a buy there. You understand? I can take advantage of a buy on US 100. Personally, it's a buy for me. 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 Okay. So this, Emmanuel, I'm not taking gold next. I'm not taking gold next. I'll be done with indices and then we'll move to that. So let's continue. So yes, that's my point. My point is that US 100, whatever the sell is going on, whatever sell that is happening, we should be looking out for a buy in the market. So if it sells to around 15,320, take advantage of a buy. Okay. The idea is about profit. So if you're in profit, you should know when to close. It's not about take profit. Once you are, if for this sale, the reason I'm giving you a take profit for this sale is because I don't expect the sale to last long. A buy that is going to last long, it's all about how long you can stay in the market. You're in profit. If you feel that this 1,000 naira is okay for you, you can come out. If you feel that this thing is on an uptrend, it should continue, then fine. You understand? But if it gets to 15,320, all these zones here, I expect it to push back up. Let's even check on 1 hour where the nearest support is. In fact, do you know that right now on 1 hour, right now on 1 hour, US 100 is actually on a support? Do you know right now on 1 hour, US 100 is on a support? If you check where US 100 is right now, it's a place that price has rejected a couple of times. Right now, where US 100 is right now, it's a support. It's a support zone that US 100 is on as we talk now. So it's possible that price will not even get as low as we're talking about before heading back up. Do you understand? But my own bias for US 100 is actually a buy. Okay, let's move on from US 100. Let's go to US 30. Okay, US30 also, US30 is still around its proven resistance, and you can see the rejection that we have had on US30. Okay, seeing the rejection that we have had on US30, where US100 is headed for, the bullish point US100 is headed for is where US30 already, or where US30 has gotten to already. You understand? So it's very possible that the way the way we are more confident of a push up for US100, it may not seem so for US30. Can see that even though my RSI that is here, can see that downtrend that is already forming here like this. So it's possible that from here, US30 is going to likely head back down. If we follow this trend, look at it. The RSI here, high, lower high, another lower high. Okay, so for US30, it's not looking that bullish move we're expecting. We don't expect as much for US30. So what I'm going to do for US30, expecting this sell to continue, is I'm going to have my sell stop. I'm going to have my sell stop at around 33989. For US30, I'm going to have my sell stop at around 33989. 33989 for my sell stop. I'll have it around 33989, and then I'll take profit at least. I'll take profit around 33915. 33915. I take profit around 33915. I take profit around 33915. Okay, that's what I would do for my sell on US30. That's what I'll do for my sell on US30. Okay, so that is around here. So once price gets to this support, I expect that from this support, price should likely push back up. You understand? Price should likely push back up. Also, try to apply your 15 minutes, your 50 EMA. Okay, once we are well into 330, use your 50 EMA on your chart to actually check out or to actually follow the movement in the market. That 50 EMA is really going to help today, so that once price breaks above the 50 EMA, you can take advantage of a buy. Once price gives you 2 bullish candles above the 50 EMA, take advantage of a buy. But if it gives you 2 consecutive bearish candles below the 50 EMA, then we can look out for a sell. You understand? Okay. So US30, I've given a sell stop, right? I've given a sell stop around here, around 33989. That's where my sell stop is. I might take profits around 33915, thereabouts, or 33910, just around that point. That's my trade for GBP. Oh, someone asked of GBP USD. That's my trade for GBP USD is still trading, still around that support zone. For those who are on a buy, if you're already on a buy, just relax and hold it. You understand? Just relax and hold it. If you're still on a buy, relax and hold it. That's a verified support, so there's a high chance that it will head back upwards. Okay. Hey, it is going south. Please, if you are on GBP USD, okay, you're most likely not more than 10 pips in 10 pips loss. So please, you can do well right now to close it. Do you understand? You can do well to close it. This is a place for analysis, not where you just come and be panicking that is going south when price is just 10 pips against you. Is it your first trade? So you can close it so that you can have rest of mind though. This is a verified support, and price is likely going to dance around there. Price is going to dance around there. But if this candle, for instance, closes below this point, this candle closes below this point, then it's like going to keep heading downwards. You can make recover whatever you have lost from the sell. You understand? So this one I'm just saying is going south in capital letters. Oh, wow. The thing is that if we're in a class for freshers, class for freshers, for instance, like, you know, the virtual class, the evening class. Like, when you're in a class where people are trading, people don't see loss, don't make profit, don't market, don't come back to their favor, you know, that's how we react to messages. Like, we just laugh, like, oh, okay, don't worry, you're going to learn, you know, so just chill, just chill. But trust me, I understand how you're feeling. And like I always say that psychology is number one. If you're in a trade, you're not comfortable with it, you know, it's better you close it. It's better you close it, you understand? So let me continue, please. I've done US 100, I've done US 30, right? I've done US 100, I've done US 30. Let's go to US. Should I do US 500 today? Yeah, let's look at US 500. Yeah, I'm going to go to currencies. You know, this is indices class, so I want to touch through the US indices first, and then we'll go into currencies. We'll look at all of them. Look at all of them. So this is US 500. Just like, so let me give us a clearer chart. US 500, you see, you have a couple of, you know, bullish move. You know, it's currently around a strong resistance point. And then it's giving us a candlestick pattern that shows like a level of rejection, you know. So just like we did with US 30, can likely look out for that. But do not forget that for these instruments, once they sell to the nearest support, they are still on an uptrend. So the best you want to do is to take advantage of. So for instance, this is US 500. My sell stop for US 500 can be at 4403. 4403. Can have my sell stop at 4403. Take profit at 4390. My sell stop can be at 4403. Take profit at around 4390. Okay, but whatever makes US 500 to sell to around this point, whatever makes US 500 to sell to around 4475, 4470, 4477, that 70 zone, whatever makes US 500 to sell to that point, I should be looking out for a buy from there. Okay, just like I said with US 500 also. US 500, we gave a sell stop at 13,355, take profit at 13,325, right? But I said whatever makes US 100 to sell to around that zone, makes it to sell to around that zone, from that 320 zone or thereabout, we should be looking out for a pushback up. That's what I said, right? So I'm saying the same thing for 500. We are selling at 4403, take profit at 4390. But if US 500 still sells further to 4370, 4372, 4375, around that zone, we should be looking out for a pushback up, a buy. You understand? So that is that about US 500, right? I gave for US 30 now. I said for US 30, 33989 sell stop, 33989, take profit at 33915 thereabout. But I said from around this place here, from this support place here, we should be looking out for a buyback on US 30. Around here, you can see how price came down all these places and went back up. All these places is a support zone. So from this point, if US 30 sells to 33,800 or thereabout, we should be looking out for a buy, a pushback up from that point. Do you understand? So let's look at US 2000, and then we'll go to commodities and currencies. US 2000 is already showing bearish pressure. US 2000 does the most, like it does the most, you know. So for US 2000, we're not going to take an immediate trade now because the trades I wanted us to capture seems to already be on. Okay, so what I would like for us to do on US 2000 is to wait to take a buy around here. A way to take a buy around here. Let me reduce it. Let it not be let the buy not be around a very wide zone. Okay, good. So whatever US 2000 does, it sells, fine. If you can take advantage of the sell, fine. But a buy should be expected once it sells to around 1770. From 1770, we should be looking out for a buy back up. You understand? We should be looking out for a buy back to the top. Okay, looking out for a buy back to the top. Then let's look at gold. Then let's look at gold. Gold also, gold is also selling. Gold is also selling. You can see how gold. Guys, for those people who trade gold, who love to trade gold, please watch out for how today's candle on gold ends. watch out for how today's candle on gold ends. If today's candle on gold ends like this, this is not the close of this market yet, but by tomorrow morning, you can watch and check on the daily time frame. If the candle closes like this inverted hammer like this, the same way it did like this, or it did like this. If it closes like this, whereby the upper wick is longer than the body, that means that there's likely going to be a massive fallback on gold. Okay, that's just for the daily time frame. Now, looking at it on 1 hour, let's check it out. Let's check it out on 15 minutes. See what's up. Okay, so this place has formed like a support zone, it's like now a verified resistance to price. Okay, so it seems like gold is likely going to keep falling. Gold is likely going to fall further down. So for gold, I'm going to be taking my sell stop at around 1874. 1874 sell stop, take profit at 1871. Sell stop 1874, take profit at 1871. Why my buy? My buy stop is going to be above where you have these two candles having an issue here. That's 1880. I come out at around 1883. So for gold, I'm entering at 1874. I'm coming out at 1871. For the buy, I'm coming out at 1880. I'm entering the buy, I'm entering at 1880. I'm coming out at 1883. Okay. I'm entering the buy at 1880, coming out at 1883. The sell at 1874, coming out at 1871. Okay. So let's look at where's it? GBP-USD. GBP-USD is actually selling below that verified support. It's actually selling below that verified support, but please hold on. Yes, please. Okay. So good. It's selling below that support. So what you want to do for this GBP-USD, this candle has to close. If this candle closes bearish and closes below this verified support, then you can actually sell to the next support. So because it's still on a verified support, I'm not going to give a pending order because you don't want a situation whereby it spikes that pending order and heads back up. Okay. So what you want to do is you want to watch GBP-USD for when it closes. If it closes bearish like this, then it's headed back towards this verified support, but I still expect it towards the end of the candle to head back into the band. Okay, so that's for GBP. For GBP-USD, I'm not going to give a pending order. Okay, it's at a verified support, and even on 15 minutes, it's already close to a support. So there's a high chance that any time when I can push back into the band. You understand? So what you want to do for GBP-USD is to wait for the current 1 hour candle to close. If the 1 hour candle closes below okay, let me give us a price. If the 1 hour candle closes below this last bearish candle, which is if the 1 hour candle closes below 1.22500, if the 1 hour candle closes below 1.22500, then it's likely going to head further down to this weak support. And if it closes below that, that means we have at least 30 pips to make from it. But I expect it to head back into the band. Okay. Nothing changes that yet for me. Then Euro-USD. Euro-USD also having its own current bearish move, which I don't expect to last for too long. Good. So we have, let's see how many pips we have from here to the weak support that that we can see on 1 hour. Remember, I've always said that I don't really care about whether something is a weak support or a strong support or whatever. A support is a support. You understand here? So if you're trading Euro-USD, this is what I will give you to do. We're going to be looking out for trading some rejection, making some rejection trade. If Euro-USD sells towards Euro-USD sells towards Euro-USD, if it sells towards 1.05560, if Euro-USD sells towards 1.05560, if it sells towards 1.05560, you should be looking out for a buyback. Just like if it sells towards this place, you should be looking out for Euro-USD going back up at least some 10 to 20 pips. 10 to 20 pips. So if you enter you can enter a buy, you can place a buy limit at around that zone. You can place a buy limit at around 1.05540, 1.05540, place a buy stop around there, and then you can take set your take profit at around 1.0500. 1.0500, 1.0574, you know, just around that point. But I expect that from here it should bounce back up. Okay, that's what I expect, that from there it should bounce back up. And that's GBP USD. Let's continue. Have we looked at oil? No, we've not looked at oil. Oil is back up. Or is this 15 minutes? Oh, it is. Look at oil on 1 hour. Oh, oil is back up actually. After that fall from this verified support, actually did it. Guys, you know, I'm just looking at your chart. With normal support and resistance, you can actually make a lot, can actually do a lot in this market. You understand? Just looking at what price has done in the past, it's less risky that way, trading at a support or at a resistance. You understand? So with what we're looking at oil and with what is going on with oil, it's very possible that this buy or this push up can likely continue. Okay, what I have on 1 hour here at this point, I have an inverted hammer. And this particular candle is supposed to confirm it, but it has not done so. So if at all this thing is going to sell, if oil is going to sell, I'm going to place my sell stop at around 86.73. I'm going to have a sell stop at around 86.73 and then take profit at 86.00. 86.00. 86.00. Okay, so I can have it at 86.73, take profit at 86.00 for my sell on oil. If I'm taking a buy on oil, I can do this because it's already close to that resistance point. I'm not going to give too much of a space for my end between my entry and my take profit. In fact, no, this is what I'm going to do. I've given us a sell stop. I'm also going to give us a sell limit. I'm going to give us a sell limit around here. That's what I'm going to do. I gave us a sell stop at 86.73, take profit at 86.00. I'm going to give us a sell limit around this proven resistance. I'm going to give us a sell limit around there. So anything that makes price to buy towards, once price buys towards 88.20, if price buys towards 88.20 or it buys towards 88.20 to 88.60. If oil buys towards 88.20 to 88.60, you should be looking out for a sell from that zone because it's a strong resistance point. You should be looking out for a sell from that zone. Okay. Okay. Let's take requests. Euro JPY. How many persons sold Euro JPY yesterday? Because we said to sell Euro JPY. It was a very slow trade, but it finally just fell. You know, it finally just fell. I think we said to sell Euro JPY and GBP USD yesterday. I finally just paid off. So, but looking at Euro JPY right now, remember we said how it has been ranging and ranging just around there and all that. I expect this sell to continue. I expect the sell on Euro JPY to actually continue. So what we are going to do is that for Euro JPY, if you want to trade Euro JPY, watch out for 157.900. 157.900. Once your candle closes below that point, once your candle closes below 157.900, your candle closes below 157.900, look out for a sell to around 157.620. Look out for a sell to around 157.620. 157.620. So from 157.900, look out for a sell to 157.620. You understand? So let's do it like that. I've done gold already. I've done gold. CAD CHF. Okay, let me look at CAD CHF. Just feel like doing look at CAD CHF. Okay. This is a very wild fact that someone is actually no one is trading this particular instrument. Okay. Well, from daily time frame, we should expect CAD CHF to actually make some level of retracement back to the upside. You understand? So if you're trading CAD CHF, I feel like this bullish move is likely going to continue. You know, so you can watch out for once it breaks above 0.66442. Breaks above 0.66442, then you can continue that buy. You understand? You can continue that buy. Once it breaks above 0.66442, I think you can continue the buy. You understand? Yeah, that's my own advice. Okay, so it's 2:30 already. Let's check out what's cooking in the market. Dollar index still pushing up. US 100. US 100 does not want to come down to our point before going back up. US 100. Please, you are trading US 100. You're trading US 100 with the way the dollar is pushing up. The way the dollar is pushing up, still have your sell stop. We have our sell stop at 15,355 points. I think 15,355 we have our sell stop. We have our take profit at around 15,325. Right? That's where our sell stop is for US 100. So let's still hold that. Then GBP USD. Remember, we gave this particular place for this candle to close. Aha. So Euro JPY. We said Euro JPY is likely going to continue selling. It's likely going to continue selling. So I'll still advise you sell on Euro JPY, especially if it closes below 157.900, which is likely going to do. You understand? Which is likely going to do. Gold. We gave gold at 1874. Take profit at 1871. Right? Give gold at 1874. Take profit at 1871. White oil, we gave oil sell stop at 86.73, take profit at 86.03, right? Hey, that's what we did. I've mentioned gold again, Mr. Emmanuel. I hope you have heard it too. It's well with our network. I know how you can, I know how that thing can be. You understand? So yes, that's it. My take on the dollar is that it's headed back for this particular place, for this resistance here. It's headed for this resistance. And I feel like because of that bullish move, US 100 should likely still come further down. You understand? But US 100 is not even coming down to our entry so that we can follow this buy. Let us add our EMA. So see, this is the thing. If price is doing, you have different strategies to catch price or whatever it's doing. Okay. Oh, sorry. Let me give us a clearer chart now. Hey, I don't want to remove my entries. Okay, I will delete the Bollinger Band. Good. Now look at this. So we have our sell stop at 15,355. Take profit at 15,325, right? Look at it. We have that sell stop. Now, please, another thing I'm going to advise you want to enjoy US 100 today, because there's going to be a lot of volatility in this US session. So what we are going to do is this. That your sell stop is still there. Right now, put your 50-period exponential moving average on your 15 minutes time frame. Okay, if it is not going to get our sell stop before it starts buying, once it gives you two bullish candles above your 50-period moving average, if it gives you two bullish candles above that, you can take a buy. Okay, you can see that even below this moving average, it has not given us a sell yet. Why do I say that? Because it has not given us two consecutive bearish candles yet. This one was bearish, the next one was not bearish. This one was bearish, the next one was not bearish. So price has not chosen a position yet. So if you're using your 50 EMA, if it gives you two consecutive bearish candles, take a sell. Okay, so apart from this sell stop we have here, use your 50-period exponential moving average to guide yourself. You understand? I didn't send USD card. So you likely would not have gotten it because I didn't send it. I remember when I was in the world, when you try to talk to ladies, you say, sorry, I didn't get your number. They will not tell you that's because I didn't give it. God. Oh, let's go to USD card because of this thing that I just remembered now. The dollar is strong, so USD is headed for this resistance. But the truth is that oil is also strong. Okay, so if you're trading USD card, I don't expect this buy to continue for long. Look at what I'm saying here. Card deals with oil. Card deals with oil, and oil is currently strong. Oil is still buying right now. So around this particular place, where this resistance is on USD card, that is around 1.36215. 1.36215. That's where you should be looking out for taking a sell. You should be looking out for taking a sell there. You understand? I take a sell there around that point. I expect that USD CAD is going to fall back down, except if it closes above there, that's when you might likely want to buy. Okay. But for USD CAD, I expect it to sell back around this resistance. You understand? US 30 is the sell stop is activated. It's currently in profit. Please monitor it. So US 500 is yet just playing, but it's likely going to still push further down. It's likely going to still push further down. And what we said for US 2000, US 2000 is already approaching the point where we said you should be looking out for a push back up, right? Here, that's the 1770 zone, 1770, 1765, around that place. Should be looking out for a push back to the upside. Okay. US 100. This buy is still enjoying. So please, for US 100, you have your 50 period moving average. That will really help to guide you. Your sell stop at 15,355, take profit at 15,325. But your 50 period exponential moving average, if for instance this bullish candle, if this thing breaks above here and gives me 2 bullish candles above this moving average, I will buy and I'll make profit. Okay, I'll buy and I'll make profit. Euro JPY should be on a sell. Euro JPY should be on a sell. Euro USD, Euro USD has entered the zone where we should be looking out for a buy, but still hold on. For those people who are not on a buy yet, Euro USD, we gave the price to be around 1.055. Once it gets into this 1.055 zone, you should be looking out for a buy from there. Okay, should be looking out for a buy from there. US 30 is already very much in profit. Already very much in profit. See, please watch out for that particular place. Watch out for that place so that can come out. Buy limit on US 100. Talked about, did I say anything about it? I didn't say anything about a buy limit. Okay, well, okay, I get you. Well, if you're setting a buy limit on US 100, it has to be around this verified support here. Your buy limit for US 100 can be around 15. I first said around 15 to 320. Your buy limit around 15 to 15,320. You know, it could also be, you could leave that out. You could put your buy limit around 15,250. Can put your buy limit around 15,250. So your buy limit, make it 15,250. But with the way US 100 is behaving like this, you know, if it gives us 2 candles above this, it should be headed upwards. You understand? It should be headed upwards. Okay, so please, for oil, we gave it at 86.73, take profit at 86.00, and we also gave a sell limit. I said from the 88.20 zone to 88.60 zone. You should be looking out for a sell limit there. Right? Good. Okay, guys. This particular class has been live streamed on YouTube. No, it has been live streamed on YouTube. So please check out YouTube. For some people who just came on board and did not really get what I was saying about the exponential moving average, like I just explained, we have the video on YouTube. Okay, so do well to check us up on YouTube and watch those videos, like, comment, and even comment. You know, you can put your comments there so that if you have questions regarding that, put your comments, they can be attended to. Okay, but for those people who do not have our YouTube link, let me try and get that for us. Our YouTube link. We also had a special training today on the partnership. It's also on YouTube, you know. So if you just go to YouTube, search for Rally Trade, you see our content there. You understand? Oh, thank you very much. Yes, so you have that. You have that. Okay. So yes, someone says GBP USD is still selling. Yes. We talked about GBP USD now. I said if it closes below this point, then you can recover a sell. Whatever, you can replace a sell. You can take a sell up to this week's support here to recover that. I think we talked about that. Maybe you didn't hear that when I said that. So yes, because with the way it's really pushing down like this from this verified support, you know, it's likely it heads there. But I want for this particular candle to close to determine that it does not end as a hammer or something like that. You understand? So if you're already on the sell, if you're already on, sorry, you're already on a buy from this verified support here, let this candle close. Let this candle close. You know why I'm saying that? Okay, so yes, let that candle close if you're already seen. I expect that Euro JPY, you're also on a sell on Euro JPY. Have your 1874 sell stop on gold ready. 1874 sell stop on gold ready. US 500 will still enter into, to start. If it has not triggered already, it will soon be in profit. US 30 is currently in profit. What else? What else? USD card is close to that resistance point. So let's watch out for that resistance point. Okay. If it breaks above that place, then yeah, to likely continue buying. So I want to watch that place. Now, US 2000 is already on this verified support, guys. US 2000 is already on this verified support. This is a strong support zone. Okay. So this is a place where you likely want to scalp your buys from now to take advantage of any rejection that it does in price. You understand? So please, don't dull, please don't dull. And just because I stumbled on it, USD is also at a strong resistance point. It's at a resistance point. It's also giving us a double top. Resistance point also giving us a double top. So it's very possible that from here we can see it heading back down. So if you're trading USD you can actually look out for a sell from this particular point. Look out for a sell from here, and take advantage of some 10, 15 pips. You understand? Okay. So I was saying, right here on the chart, if you scroll up a bit, you'll find out that we've dropped the link to our YouTube class. We've also dropped the link to a session we had today, which talked about making money outside trading, which is a commission-based thing. That's the Rally Trade Partnership. So do your best to actually go on YouTube and check out those information there, and then get ready for us. Remember, like I said, this link, we don't have too many links. This particular link is the link we use for all our analysis: morning analysis, afternoon analysis. This link with which you joined is what we use. So we'll be expecting you back by 8 a.m. tomorrow. We're expecting you back by 8 a.m. tomorrow, and we'll also be having an afternoon session by 2 p.m. the same tomorrow. You understand? So with this same link, so you don't have too many links with which to confuse you. We have just two links: this one for analysis and the other one for our evening sessions. That's the evening training session. That one is not trading. It's just that one is for learning the basics of trading. You understand? So but tomorrow we will continue with this same link by 8 a.m. So please don't forget, we'll continue with this same link by 8 a.m. I want to thank you all for your time. I hope that even beyond the trades, you have actually understood what we talked about with the strategy. Please, for those people who did not, let me still put that, I'll put that EMA class. I'll put that EMA YouTube link now. I'm going to drop it now on the chat so that for those people who have not gone through it, you can go through it. Okay, I'm going to drop the YouTube link to that EMA class. Oh, sorry about that. I sent it as a direct message instead. Exactly. So I'm going to drop it. Please, God bless you all. If there is something you were not clear about from what I explained in the Bulligan ban and all that, please reach out to your account officers. I get feedbacks from them so they can let me know and we can talk about it next time. Thank you all for your time. Mr. Romeo, thank you so much. Zion and all the likes. Mr. Jimo, you're asking if we can buy US 30. I first of all, I hope that you actually enter the sale on US 30. Okay. It's not yet at take profit points, but you don't want to depend on that take profit. Oh, you understand? And remember, I said that we should be looking out for a buyback on US 30. But it's not still at that has not sold to that last point, I expect that it should still sell a bit more before you look out for buying it. You understand? But yes, right now it's likely going to it's likely going to continue selling. You understand? But if it sells towards, I'll be more confident with following the trend if it sells towards around 33,810. If it sells towards 33,810, yes, then I'll continue. You understand? The request for link for registration. Registration for, okay, you know what? The link for registration, just reach out to your account officer. Is going to help you with that. Okay. Thank you all for your time. It's always a pleasure discussing with you guys. You will hear from me again next week by the special grace of God. But do not forget, tomorrow morning by 8 a.m. we'll be here for you. Oh, you don't know who he is? Okay. Okay, this is what will happen. Just send a direct message to me with your email address, please. Send me a direct message. I think maybe you sent it and I missed it the other time. So send a direct message to me with your email address, please. Okay. You understand? Send your, just as you are dropping this message on the chat now, you can see everyone there. Click on that everyone and select me, Samuel, the host. Select me and send your email address to me. You send your own to me. So send your email address to me. You understand? So what we will do is I will look into who your account officer is and he or she will get to you. Okay. For the rest of us, thank you so much for your time. God bless you. Enjoy the rest of your day. Bye for now.